Yo, what's up, guys? I go by the name of CityFX and I am a trader. This is my first YouTube video, and I came with a very powerful strategy. A strategy that will change your life if you execute it properly. So, what it has is what it's called is TLB. It's the TLB strategy, and it's called the Tokyo and London breakout. But before we continue with the video, I need you guys to know that this is not financial advice. I'm strictly doing this for entertainment purposes only. If there's anybody out there busy selling you something under my name, just know it's a scam. I do not sell anything. Everything I post in this video or anything that is linked under my name, the resources I share are strictly free. But yes, guys, so I'm not gonna waste any of your time. I'm just gonna go straight into it. But before we go into the markets, let's just understand the concepts quickly. So right now, I just wanna draw a mini sketch so that you can understand what's happening in the market. I might need this. So let's say the market comes, does whatever it has to do, whatever, and then boom, and then boom, 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 boom. Okay, I don't know about that one, but yeah, something similar to this. What we call this is sessions, right? But let's say yeah, from there, let's say that was Tokyo session, and then this one right here was London session, and then the remaining one, which is that one. Hold on, let me just do this, guys. I'm using a phone, by the way, because it's way more simple and I can finish the video quickly. But yeah, these are sessions right here. So whenever I talk about sessions, this is what I mean. Where on the let me just do this. There we go. So yes. So this right, it's leaving that. This side right here is a session. This side right there is its own session, right? Let me just do that. Yes. And then this one right here is its own session. The market moves in, what can I say, in ranges. The market always goes up and down, up and down, up and down. The market doesn't just go up and doesn't just go down. So right now, we would need to literally enable an indicator right here that I will select for you guys. But you quickly go here before we go anywhere. I don't know why I'm showing you guys this, but I just want you guys to understand, right? So you go to the three dots. Some people it may be different or whatever, but why don't I have an indicator tab? Okay, I'm not sure why mine is not showing, but you'd go to your three dots and then find where it says indicator. I'm struggling to find it. I'll take a screenshot for you and show you. I just don't know why it's not showing right now. But you'd search this this indicator named this. Let me just text it quickly. It's called the FX market session, right? So this is the key of the strategy that we're using, because it'll be making our life easier, whereas you don't have to draw this out and making your whole life complicated. So we have a session called Tokyo session, right? Which is probably going to be the first one that you see on your left. And then the middle one is called London session, right? And then the following one is called New York session. So all of these arrows that you see is the sessions I'm speaking about. So this would be your Tokyo, that would be your London session, and this would be your New York. So for us to get into the TLB strategy, which is the Tokyo and London breakout. So market would come from a Tokyo range. Sorry about that. Oh, market would come from a Tokyo range, right? Where it was doing whatever it was doing. And then we would wait for a breakout of this market, of the new opening New York session, or whenever it's during New York session, and then we need to enter for a trade. And our TP would be so much just for that. Okay, so in this strategy, right, what we call a breakout is when the market comes to a specific zone, right? Let's say the market was here. If it comes and it breaks, you see like this one below here, right? This one right there where the arrow is, it failed to break, which shows that market was not strong enough to break the market, well, to break the zone, you know. And then market, when it came to this area right here, it broke, which shows that buyers are now in control. And London session is now breaking the recent high of, not the recent, but the high of the Tokyo session that we would be in right now. And for this instance, you would enter immediately after the breakout. So the Tokyo to London. So immediately after Tokyo, when we have a breakout of the London session, that's when we enter immediately. Whereas the other New York session, where you need to wait for a breakout or a break, and then wait for the market to continue in that direction, like a retest. Cannot retest, but like it's going back to the initial direction, you know. So right here, for the people that know, we would be entering our position right over there, stop just slightly under that low, and then target is 2:5, right? So our 2:5 would be right there. It doesn't matter which one you select, but I just like going for 2:55. It's way more simple, way more, fixed. So right there we would have our TP. And then we would wait for the New York session. We would go to our New York session where, let's say, it was at the recent high right there, and then maybe a recent low over there, right? Just like this. So you would get the market to break out of this area right here. You would make for the market to break this area right here. Wait, let me just do that. You see where I put the arrow right there? You would need for the market to break that arrow, right? Come back into the initial direction over there. And then when it comes back to this zone, you see you mark out this white line where it started. When it comes back down, that's where you would enter and target a 2:5 as well. Whereas this time we're going short. Do you see that we didn't break above this area right here? We needed a break on either side. So we broke on the lower side of it. If it doesn't break either or, we do not trade, you know? So we would wait for this area right here. Why is this arrow giving? Okay, anyway, guys, let me just delete this since you guys saw it. So for this instance, since we broke below and we came back and rode this direction down here, because market could have continued up, but it didn't. It failed and pushed down to show that sellers are in control, right? So we would literally target, guys, sorry for not having time to have a laptop or Telegram. What do you call this? Trading View Premium. But bear with me, guys. Let me just make this line more straight. That's it. So this instance, you would wait for the market to break. See where I put this? Immediately it breaks, not break. Immediately comes and retests into this area, because you saw it. If you entered here, you're gonna be stopped out. What I mean by stopped out, it was gonna hit your SL. So that gray part is Okay, since I see you guys are confused by what these things are, the purple and the gray. The purple is the profit, right? To show that you're in profit. The gray shows the losses. That okay, when market reaches this area right here, please take out my orders. And then the purple side, the end of that purple thingy at the top there shows that this is where I'm willing to take my profits. For those that don't know, right? So if you had entered right there, you would have been stopped out. So what you needed to do is literally enter when it comes back into that zone that broke out initially, and then you target this low right there, either this low or you target the beginning of the session, but that's a lot of pips to risk. So I initially do just breathing space there, and then I target 2:5. So market would be right over there, right? And then I write it down. That's literally 2 trades profit. And let's say maybe this one was gonna be your loss. This one right here, hold on. This one would have been your loss. You would have made up your money there. So you don't need to trade a lot of times, literally just sessions. The TLB strategy. Okay, so now let me stop yapping. Let's go into the market and have live examples, right? So you go to your indicators tab and you turn on this indicator right here. You need to make sure that you're trading gold XAUSD, right, on a 5-minute time frame. This one right here. This date range, you go to this one. Favorites is 1 minute, 3 minute, 5 minute, and many more that you don't need to care about. Just the 5 minute is what we need, right? So today the market wasn't respecting structure, but that would have been you skipping the day, you know. If the market doesn't do what I just said, do not trade, right? So look at this. Market was in our Tokyo session, which is the first step of our strategy, the T until B, right? You mark out the high and then you mark out the low, right? So from there, you wait for the market. You don't wait for a retest. You wait for the market to break this area right here. Remember, the Tokyo to London, we only wait for a breakout, right? We don't wait for a retest or it coming back. We just wait for a breakout, mark our SL right below the recent swing low, right? So right here in this area, the purple candlesticks are the bearish and then the white are the bullish, right? So immediately it would have broken there. Let's do this so that we can, but that's in the way. So let's say the market was doing whatever. I just want you to look at this area here. This area right here. Screw everything else. So from here, I just want you to focus on the blue line, this blue line, this one. Let me make it purple. Or green. Let me make it green, yeah. Makes more sense. This green line. Before that, there was no break. We could see that market was going up and down, up and down, up and down. It was failing to break to the downside. And then after that, market came in and broke this area, showing that sellers are in control of this session right here, right? So you would have put your thing right there, your SL slightly above to give it breathing space, and then you target a 2 is to 2.5, 2 is to 5.5, or 2 is to 5, whichever one suits you. You can even trade it until like the end of the session, it's up to you, but I just prefer being safe. 2 is to 5.5. Do we take our profit? Yep, we hit take profit right there. Already done. That's your trade for that session, right? And then you wait for this market right here. Like, okay, now it's it's New York session. You mark out the recent high. Remember we said we're marking out the recent high, yeah, from this step right there. From that step where we marked out the recent high and the recent low, yeah. And then we see that, okay, where's the chart? Okay, yeah, we see from this area right here that, okay, there's our recent high There's our recent low before the market. Then there is a longly area where we do not trade. I call this the longly area right here. So this area right here is the one I was talking about in the beginning of the video. So from here, this white box, we do not trade or set any trades inside of this white box because it is not owned by the London, New York, or Tokyo. So we do not select any trades. So anything that happens there, we do not touch. So we see that, okay, market came in, it broke. Now we see that it broke this area. It broke here, there. It broke over there, but it failed to go to our recent low to come back. So what I mean, and also it broke in the session, not in the session, it broke in the longly area, right? This longly area right here, make it yellow. It broke out of the recent high, the recent low in the longly area. So we do not trade. We only wanted to break inside of that zone that we wanted initially, which is the Tokyo session. We wanted to break inside of it and then below, right? And market failed to do that. So you wouldn't have taken your trade there. Nah? Because you would have entered here. You would have entered here and like, okay, it broke down here, coming back, and then there was no trade here. Nor was there a trade there. So if you had entered like, let me be greedy, you would have lost money. Lost money easily. So always make sure that you manage your risk. Okay, next example is the day before that, right? You see, okay, it's Tokyo session. Market came, it was doing whatever, came here, up, did whatever it had to do. And then, boom, it broke again. Stop below there, 2 is to 2.5, right? This area right there, was our Tokyo. Mark that, you write it, that's money, bank, boom, inside. Now we go, okay, now we mark out our New York session, recent high and recent low. Nah? Recent high, recent low. So we can see market, it came in, right? It came there, up, down. Longly session did not trade. Only wait for a sweep in a session, in a Tokyo session. Came, still didn't sweep this part. Came. It broke. After it broke, you're like, okay, I'm waiting for it to enter this white line. You see this white line? If it breaks, it needs to come back. And then when it comes back down, that's when we select our, our trades. Like, okay, here it is over there. You can either target this one, this Tokyo high, or that swing low that was there. Up to you. But I like being safe and targeting this one right there. I like targeting that, and then choose, Blani, take profit hit. Even with that one, take profit would have been hit. Just like that. So it's this trade, profit, this trade, profit. That's you making how many? So that's 1 is to, it says 2 is to 5 profits made in just 2 days already. Not even 2 days, in just the span of, let's see, from what time to what time. So if you came in, check the market from 2 in the morning, came, waited, and then had your first trade at like 1 o'clock. And then after that, you came in and checked around that time, 4 o'clock in the morning following day. You literally, during the whole day, you don't do anything but just select your alerts to be like, okay, when it reaches this area or it reaches this area, let me know. You literally don't have to trade every single time. Just select your trades and boom, You're there. You don't have to worry about nothing. Another example too is down here. Market came, did what it had to do, ba 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 ba. When it broke this area right here, like okay, here's that recent low, right? 2 is to 2.5. Voila. Chef's kiss. You would have been inside. From where? Wait, let me see. Where's that low? Right there. You would have been in a couple of pips, but then if you set your stop at break even, you wouldn't have taken a loss. But that was 2 is to, let me see. Wait. What 2 is to what? 2 is to 4.3. Because of this right here. So those that don't use stop losses wouldn't be, in an issue or whatever. But it would have hit your take profit if you targeted a 2 is to 4. But I like using 2 is to 5. We're sticking to the basics, right? Then we check, okay, from here, this is our New York session, by the way. New York session, low, right there. And our New York session high. But the high was outside there, so we'll take this one, for example, right? Take this one and put a straight line, right? Market came in this area right there. Market came in, it went, but we need a sweep only in a session. We do not trade in the lonely session. Where there's no Tokyo, no London, whatever, the gap between, we do not trade. So we can't expect the sweep to make us profit. So we were waited, and then market came in, did whatever, and then it broke. But what I needed to tell you guys is that we only need a breakout with at least 2 or 3 candlesticks outside, which like the down direction if you're going up, or like just expect 2 or 3 candlesticks outside. So this one only gave us 1 because that one was still forming, so we couldn't have counted it. And then came back again, did a breakout with 1, 2, 3. So this is a confirmation. Okay, this is a nice break. We're waiting for the market to come underneath here, this white line there, right? Came back, did whatever it had to do, went down. Immediately, you see that it didn't break this white line right there. So immediately it came back and touched this area right there, which shows that it came and broke out. Select our stop just at the recent low. Target the 2 is to 2.5. Do that like that. Let's see if we would have hit. Oh, perfect. Would have hit our take profit. Simple. So it's take profit, take profit, take profit, take profit, and just like that, guys. But let's do a few more examples. So that's already more than 2 days of a back test, right? Literally over here again. I'm just gonna go to a slight view so you can understand. Don't mind that session right there. Why is this? Right there. Market came, it was Tokyo. Immediately, remember guys, the Tokyo just wait for a break. So it came, it broke out right there. Oh, came, broke out there. The recent low, which was here. I wouldn't have considered this a low because market has never hadn't broken out. So we did that there, and then target 2 is to 2.5. Perfect. Take profit would have been hit on that day. This one right here, here's our high, here's our low of the New York. I just want you guys to look at this area here, right? Wait for that. It broke above, but we were still in a direction of we're still in a direction of the lonely zone where there's no owned market, so we do not trade it here, right? Market came down, then only it broke. But after it broke, do you notice how it didn't go inside and come back down? It didn't come back to this white line. So you would have left your take profit, you'd have left that trade and only target the one above. Because why? When the market doesn't break down, you reverse it the opposite side. Or you just don't trade. I normally, as you can see, there was already a take profit right there. What do you call this? A long that showed, I don't know why it's here, but it was supposed to be over there. Let me do this. It was supposed to be right over there, right? 2 is to 2.5. It's supposed to be there. Hit your take profit. Because with the Tokyo session, sometimes market likes fetching early buyers. So it sweeps out and then goes the initial direction. But anyway, let's go to this market here where I made a clear example for you guys to see. And we can check out the days way more simple. Here we go. Okay. So I have an overview of all the days that, let me just select that because it looks hella messy. But yes. So here we hit our take profit. I'm going to just show you without the indicator so that you can kind of see what happened. Here you would have hit to take profit. Here, this one right there. Hold on. Here would have hit break even, right? Or stop loss if you didn't put break in. Here there was a no trades. I wonder why. I'll just check it with the indicator. Here we hit take profit. Here we hit take profit. Excuse me. Here take profit. There take profit. There take profit. Take profit. Take profit. Right? Take profit. And it's literally the same example happening all over again and again. Take profit right there. Take profit right there. No trades right here. I think it's because there was no break to the liquidity, which is like last zone. I don't want like using confusing words. Liquidity is when market, so this is what I mean. Forget I even said liquidity. Market failed to break here. This arrow right there. Take profit was hit there. Take profit was hit there. Take profit was hit there. Here you would have hit in your SL. Stop loss. You would have lost the trade right here. No trades over there. Here, you would have lost your trade as well. So do you see how most of the time, even if you lose your trades, it was going the initial direction and then it got stopped out. But remember, there's no strategy that is 100%. So already these were two trades would have hit stop loss, right? And that's normal. That's trading for you. So here you would have had no trades. And let me see if there's other days. Okay, that's the last big test I had. So now I'm going to do a slight overview of me doing everything and showing you why those take profits were there. So here, remember how we're in Tokyo session, came, broke out, you would have lost your trade over there. This one right here. See, market came, London session, broke out. Remember, the Tokyo to London, we only wait for a break. And then the New York to Tokyo, we wait for a break and initial direction. So a breakout comes back down for a correction, and then we go the initial direction, which is where it broke out to. So if it broke out to the upside, we're waiting for the market to go down and then go up. If we broke out to the downside, we wait for the market to go up and then go down to the initial direction. So here, you'll hit your stop loss because we waited for only a break. We don't wait for indicate. We don't wait for break and continuation. So here's another example again. Market broke. Okay, so here, let's not skip this one. You notice how market came here, it broke. This, no. Okay, market came here, here's our low, here's our high. Broke, but didn't, oh yeah, it broke in the lonely zone. So you wouldn't have taken that as a break. See how important that is. It literally stops you from getting any losses, you know. So it came down here, it broke. You can count this as two indicators, 1, 2, because there was that third one. It indicated, but it didn't literally go down with impulse correction, with an impulse move. You know, most of the time I wouldn't like just two of these and count the third one, so I would have left that as well. Hence why there's no trades. You know, let me just do that. And then remember the break right here. Market came, it broke the Tokyo. Remember this one, we go for a straight break. We don't wait for correction. Here, market came, it broke, did whatever, taking your stop loss, and that's fine. You look for another setup, right? So came New York session. Now we're like, okay, we're marking our highs and lows. Here's our high, here's our low. Came, did whatever, but we do not trade this zone right here because there's the lonely zone. Like, okay, since there's the lonely zone, there's also an alternative to it. So if it broke out, did whatever, and market comes and corrects this zone, this low right here, this high, I mean. Here, there's the high, that's the low. If it comes back, so this area goes down. And then it surpasses, it passes this last high where it was in the lonely zone. You ride the market up. So the live example is like this, which I forgot to show you guys. I don't know why didn't I mention that. So here, market came here. It's like, okay, it stopped at this area. So market up, okay, why did the market stop here? Came, did whatever. Notice how it didn't go up, so you wouldn't have put your trade there. Played. And then it came and broke right there. You'd have entered right there. You stop. Let me just do this so it looks more neat. Hold on. Oh, brother. There you go. So it came, broke. Your SL would be right here, slightly giving breathing space, and then you write it up. 2 to 2.5, right? Yeah. Still be in profit. And then there was an entry right here. Remember, we still needed to wait for Tokyo to London, where we wait for a break only. So from right here, you'd have entered your second trade. Second trade would have been this one right here. Roll it up where your stop loss is breathing space here, right? Slightly below that. I don't know why did I put it there, but anyways,
put it there, right with it out to the top, take profit hit. So let's take profit there, take profit here. Two take profits in a day, right? So far, we have how many take profits? We have, no, there was a stop loss. And then, wait, I didn't mark this out. Oh, I forgot to mark out one of them. Guys, sorry for that. I forgot to check this one. Immediately when I came here, notice how this is another take profit again. Market broke here, because remember I took it to London. Wait for it, just a break. Wait, mark out 2.5. But this time, there was no low. So I think you would have to target, where's the break? Okay, let me just do this. Here's our Tokyo low. Wait for a breakout there. Breakout there. Oh, there's our thing. 2.5, let's see if we hit that. Oh, perfect, would have hit that too. I don't know why I missed it. But yeah, this would have been another take profit day. So remember, this one, wait for a break. This one right here, wait for a clean break. We don't wait for breakout and then come back. No, this one from Tokyo to London, we only wait for a breakout of either side, right? So it came back down, it broke this area, you'd have taken profit. If you took losses there, you'd have taken profit here and made it up. Here's another example again right there. Tokyo didn't break to the downside, but it broke to the upside. Broke, we didn't have take profit there. It's cool, made a loss. But anyway, we didn't break this one either, so we wouldn't have traded that too. No trades, hence why there's no trades here. And then let me go a bit faster, guys. Here's another example there. Here, market came, broke the London session. We spoke about that. Here's take profit. Market broke, went to the top, 2.5 profit. Here's another one where marked at our high from this lonely session right there, rolled it up, taking profit, right? We didn't break the side, no trades. Did we break the high side? No, not yet. So we didn't have traded too. Mark out our New York recent low and recent high. Okay, this is the recent low, recent high. Wait for the market to give us that recent. You remember from the other example when I told you, if it doesn't break down, wait for the market to literally go to the initial direction it wanted to go to, then we would have rolled it up. Even though we did not place any trades, market still broke the New York and then it came down and then gave us this. Remember our rule, guys. If market goes here, we don't trade this. But market came down. It broke this area right here. Is that candlestick? Remember in 5 minutes? Broke that candlestick, came down, and then it came up. So there's one, 2, 3, 4, 5 candles after the break. It confirms. Goes down. Immediately hit there. You would take your right into your long position. Stop loss just at the recent low. If you don't know which one is the recent low, just look for the momentum, the lowest momentum before the initial break. So right here, market came, it broke. So this would be your low. The recent low before the momentum. So it broke that, came down, you're taking your position. Just like that. Take profit hit. Market didn't go either or, we would have traded it. We would have traded New York session. Here's our low, here's our high. Outside there, we'll wait for that area again. You see how vital it is to check out for break. Came through, broke out, did whatever it had to do. Remember our rule again. Market came here, did whatever, didn't have anything. It broke outside. So if it breaks out of long zone, we do not trade, remember? So waited for it. And then it finally broke in the Tokyo session. So if it broke, there was more than enough candlesticks. So 1, 2, 3, 4, 5, 6, 7, whatever. Came down and immediately came up. You would have taken your high position, which is that going to that initial direction. See, would have been in profit. 2 to 2, that one is a 2 to 2.7, but only target 2 to 2.5 to be safe, right? Come back up again. Market broke from the Tokyo to the London, right? Here we don't wait for retest. Go to the initial break thing before the break, write it up, take profit. Here's our high, here's our low. If it came back up, did whatever, and it didn't break that area right there, would have never taken the trade. And then it broke this recent high and recent low, but there was no but there was no coming back candle. So after it broke, no candle came to this area right here. So we would have had that initial buy. But I wouldn't recommend that trade, guys. It's too complicated. It's too complicated. And then here is our London session. Wanted to write it low. Here it is. It broke this area right here. This one right here. It broke. Recent high there. And then rolled it down. Take profit hit. Came back. Here's our high. Here's our low. Wanted to sweep. A breakout, I mean. Here's a breakout. More than 2 candlesticks. More than 3 candlesticks. Broke. Came back down. Did whatever. Came back down here to show that we're coming for a correction. Immediately hit there. You placed your trade. Go into the upside. Right. Remember, guys. Here we need to wait for a breakout. Come back down and then initial direction. Came back. Did whatever it had to do. You would have put the 2 to 2.5 or I don't know what I put there. But it's whatever. But 2 to 2.5 would have still been hit. Easy. Just don't know why I put it there, but let's stick to the basics. 2.5. Take profit would have been hit. Just wanted to show you guys both of these. But yeah. Another one is called Tokyo to London. Remember, there's this right here. If you look closely, our Tokyo high was there. London session, this blue one. It broke. Our stop loss, just splitting space from there. Target to the upside. Come back down. Same thing again. The sideway. Mark out our high, mark out our low. Wait for a sweep. Not a sweep. Wait for a breakout. Breakout came more than 3 candlesticks. It went in this white zone. Comes back down. Like, okay, when it comes back down this direction, I'm writing it down. Where's my stop loss? At that Tokyo high. Because now, that was the recent momentum before the breakout. So you gotta put it there, right? Roll it down. Roll it down. Literally. Now, like, okay, next setup again. Tokyo to London. Remember, Tokyo to London, we only wait for a break. Break was there. Target recent high before the momentum. Roll it down. Another take profit. Here is our New York session. Remember, this one's the New York yellow one. New York session, high and the low. Wait for. That one didn't come back closely, so we didn't have trade because we only broke out. If you look closely, right here, we only broke out this area outside in the lonely zone, so we wouldn't have counted as a breakout. We only needed a breakout in the session. So it broke out, but didn't come this side, so there's no trades. And then it came back, it broke with more than 3 candlesticks. And then notice how we're in the zone, we're in the Tokyo zone, so we're in the circle, we're in the red zone. So it broke, came back, immediately hit there, take profit. Take profit hit, I'm pretty sure. Nope, take profit didn't hit. 2.5 didn't hit, break even, we move. But that would have been a nice trade though, I can't lie. Literally, this is the strategy, guys. This whole strategy. So many strategies, so many opportunities for you to make money. So yeah, thank you guys. I hope you guys understand, and if there's any questions, please hit me up.